Welcome to the option chain analysis video. So today's video is a follow-up video of open interest, put call ratio and implied volatility video that was released earlier. In this particular video, we will be looking at application of concepts we discussed earlier, and I'll be showing you two new concepts with respect to open interest and implied volatility in options trading. In case you have landed directly on this video, I would strongly recommend for you to start with part 1 of option trading strategy series once you finish this video. Link to all these videos is in the description box below. Link to the basics of open interest analysis, put call ratio and implied volatility should come up at top end of your screen. In this video, I have covered basics and rules for option chain analysis. Do watch these videos if you haven't already. So today we will take up November 2018 series of Nifty based on what we discussed in the earlier videos. Last two videos on option chain analysis were more about basics of open interest, implied volatility and put call ratio and some of its applications. Today's video is entirely about application of what we discussed earlier, and I'll be telling you which data points are the most important among open interest, IV, put call ratio and price. I'll also be showing you two new concepts that are vital for option chain analysis and price analysis. So these two concepts are: number one, impact of a single session on price trend and how to use cumulative open interest chain charts to stay on track. And number two, how to approach option chain analysis in the last 7 days of a series leading up to the expiry. These two important concepts I had left out in the previous two videos as I wanted to cover the basics first and I wanted you to understand them thoroughly. By the time you end this video, you will have a deep understanding of how to link open interest, implied volatility and price together for an entire trading series. Again, I will strongly encourage for you to watch this video multiple times to learn these concepts thoroughly. So let's get started. So let us first begin with November 2018 expiry series for Nifty, which lasted between October 26th to 29th November. In this video, I have explained open interest analysis, implied volatility and price analysis from October 29th to November 28th. Now towards the end of this video, I will explain how to analyze option chain and price in the last 5 to 7 days of a series. In the first segment of this video, we will be looking at open interest and price, and in the second segment, we will link this up with implied volatility. So the chart that you see in front of you is a snapshot of open interest on October 29th. Upper panel that you see is the total open interest for the series, whereas lower panel is open interest change for the day. Range for the market as per open interest is 10,000 to 11,000. So at the beginning of the day, price was at 10,075. As session progressed, price moved from 10,075 to 10,275. We'll come to the price analysis segment in the next slide. But look what has happened at 10,000, 10,100 and 10,200 PE. As price has moved higher, strong open interest addition was seen across all these three strike prices. Some reduction was also seen at 10,100 call option and 10,500 call option. If you look at the price analysis for October 29th, again strong demand candles are present on the chart. Strong demand candle is when range of a candle is wide and close is strong towards the high point or low point of the day. In the chart in front of you, I have posted two separate candles that represent a strong demand candle and a strong supply candle. To depict the price action for October 29th, I have posted candle volume chart for you where width of the candle is dependent on volume of that candle. The higher the volume, the wider the candle. Now, candle volume charts are different from candlestick charts as they incorporate volume within candles. Again, this form of charting is a very powerful concept. It's very clear from the chart that the two demand candles that we have here have had significant volume associated with them. We are therefore taking confirmation from open interest, price and volume. Again, this is something I did not include last time in the two videos I released, as I did not want to introduce too many things at once. But I hope now you can see how powerful this concept is in terms of visually seeing price action for a day and then linking it with open interest activity for the day. Implied volatility part, as I said, we will be covering few slides later. This chart that you see in front of you is the open interest snapshot for October 30th. Now, based on open interest, range for price still remains at 10,000 and 11,000. Price as of 29th October, that is previous session, stood at 10,275. Now, during the day when price struggled to move above 10,300, strong open interest addition was seen at 10,300 call option. Open interest addition was also seen at 10,000 and 10,200 put option. On any given day, if you had looked at this data of open interest, you would conclude that resistance for the market is at 10,300 and it would be difficult for market to move higher. However, before reverting back to this data point, let us move first to price action analysis. If you look at price action analysis for October 30th, while price has moved lower, there is no significant supply candle that is visible. Also, price in its previous session has formed a structure of higher high, which in itself is a bullish indication. Despite a fall in price here, two things you have to consider. Number one, lack of volume, and number two, both calls and puts have witnessed open interest addition. If indeed price has to move lower, then on next session price would need to move lower with high volume, and further open interest addition would need to happen at calls, preferably along with open interest reduction at puts. I hope this particular point is clear. So technically you have to understand one thing, that sustained fall in prices almost always requires strong volumes. Price can rise with limited volume, especially in the middle portion of a trend, but for price to fall on a sustained basis, lot of volume is required. Do remember this important concept of price action. This chart that you see in front of you is the open interest snapshot for October 31st. Now, based on open interest, range for price has now moved from 10,000 to 11,000 to 10,000 to 10,700. Range shift is seen here for the first time. Now, price as of October 30th stood at 10,250. Now, whenever you see range shift happening based on open interest, which is in this case, you need further confirmation from price. Now, what happens is that at times range shift happens, but there is no follow up or follow through, and therefore you should only draw conclusions once price confirms. So during the day, price moved towards 10,350, and while this was happening, strong open interest addition was seen at 10,200 PE, 10,300 PE and 10,400 PE. This was also followed up by open interest reduction in 10,200 call option and 10,300 call option. If you look, open interest addition has also happened at 11,000 call option, but like I explained in the previous videos, this has to be ignored. Always remember that when open interest buildup happens at one side of the market, for sustained trend to develop, open interest reduction has to happen on the other side of the market within 1 to 2 sessions. This is a very important rule which I had mentioned in the earlier 2 videos as well. Let us now look at price analysis for this particular session, that is October 31st. If you look at the price analysis for October 31st, price has moved significantly higher after we have had a strong supply candle. Now, volume on the downside initially was strong, but as open interest buildup increased at puts, price staged a comeback on back of strong volumes. This was again a bullish signal. If you see, price has also completed a structure of higher high and higher low while closing at 10,350 for the day. The caveat here is how you should deal with a session like October 30th, where one day's open interest activity was suggesting resistance ahead, and then in today's session, price has moved higher. Such days usually confuse a trader, and there should be a way to deal with such sessions. I'll just show you what I mean here. So look what has happened on October 31st. Price has moved up. On October 30th, price actually moved down with a kind of consolidation makeup. But look what had happened in the open interest segment. There was huge open interest buildup at 10,400 call option. So typically when such days happen, traders do get confused and miss out on these sessions that usually show up after such sessions. And this is what I'm going to address in this particular video. In the slides ahead, I will show you how to avoid these sessions. This is also something that I had left out in the last two videos. This chart that you see in front of you is the open interest snapshot for November 1st. Now, based on open interest, range for price still remains at 10,000 and 10,700. Price as of 31st October, that is last session, closed at 10,350. Now, during the day, price consolidated between 10,375 and 10,430. Now, as price was consolidating, put open interest addition was happening at 10,000 P and 10,400 P mainly. However, again, open interest addition was happening at 10,400 call option. So again, this is very similar to what we saw on October 30th, where open interest addition was happening in calls, and yet on October 31st, we saw market moving higher. So what I'll do is, let us first move to price analysis section for this particular day, and then I will show you how open interest analysis of such individual sessions should be analyzed so that you remain on the right side of the market. If you look at the price analysis chart for November 1st, price has just remained in a range. No significant price activity has taken place while price has moved in a range and while we have seen open interest addition happening in calls. If you see, there is no strong demand or supply candle that has played out in this particular range. So now we come to the most important point, that is how to deal with such sessions where price is suggesting mere consolidation and open interest analysis was suggesting something else in terms of open interest addition happening in calls. Now, such sessions usually throw traders off track, and now I will show you how to deal with such particular sessions. In the last two videos, I had introduced you to the concept of cumulative open interest chain charts. However, I left out why it is useful to use cumulative charts and when to use such charts in options trading. The main reason to use cumulative charts is to see the underlying bias of the market while limiting the impact of single sessions on underlying market and its trend. This way, as a trader, you will not get influenced by one single session and you will always stay with the underlying trend. Let me show you how. This chart that you see in front of you is the cumulative open interest chain chart between October 29th and November 1st. Now let us recollect that on November 1st, strong open interest addition was seen at 10,400 call option. Similar activity was also seen on October 30th. If you look at the cumulative open interest chain chart, it is clear that as price has moved from 10,000 to 10,500, strong open interest addition has happened across put strike prices. Also, between 10,000 and 10,500, if you look at net open interest reduction, that has only happened in calls. If you encounter sessions like November 1st, you should realize that such sessions should be ignored as the overall trend of open interest activity still suggests underlying bullishness. Also, we have seen from price action analysis that overall structure of higher high was still intact, and on the upside we have seen strong demand candles on candle volume charts. So whenever you see a negative sessions in terms of open interest or price, first see if both are confirming the same and then look at cumulative open interest chain chart to see if underlying trend is intact or it has changed. Don't draw conclusion based on any one single session. So I hope now you see how powerful this concept of cumulative open interest analysis is and how to use this in your own analysis. I'll be showing you in slides ahead how to use this again and again because such single sessions do come up repeatedly in market on each series basis. I know this concept will confuse you a little bit in the beginning, but once you finish this video, watch it again as you will understand this concept even better with each viewing session. What I'll recommend is take a screenshot of all these charts and then watch this video again. This chart that you see in front of you is the open interest snapshot for November 2nd. Now, based on open interest, range for price still remains between 10,000 and 10,700. Price as of November 1st, that is the previous session, stood at 10,430. In today's session, price has moved up to 10,520, about 90 points higher, and strong open interest addition has happened at 10,500 put option and 10,600 put option. We have also seen open interest reduction happening at 10,400 call option, 10,500 call option, and mainly 10,600 call option. Now, had it not been for the cumulative open interest chain charts, we would have never known the underlying net bias of the market and would have assumed November 1st session as a negative one given how open interest addition had happened at 10,400 call. Now, given that upper range has moved from 11,000 to 10,700, November 1st session would have been viewed as a negative one if one would have looked at it from stand-alone basis. Now, what I mean here is that couple of sessions back, we saw that range from 11,000 had shifted to 10,700. Now, someone who's trading in real time and who's not looking at cumulative open interest chain charts, had he seen strong open interest build up at 10,400 call option, he would have clubbed the open interest information with this range shift information and would have assumed that market is heading lower. So this is where cumulative chart is so powerful, as it keeps you on the right side of the market again and again. Let us now move to the price analysis segment for November 2nd. So if you look at the price analysis for November 2nd, price has moved higher with the gap and then consolidated at the top end of the range. Again, the structure of higher high and higher low is still valid, and trend of price is clearly on the upside. If you look at the candle volume chart, strong demand candles are easily visible and relatively there is no strong supply candle. Therefore, price along with open interest have both indicated a strong session for the market in the direction of trend. And do not underestimate the importance of volume here, because repeatedly we have seen that whenever price is heading higher, it is heading higher with strong demand candles which are easily visible on candle volume charts. This chart that you see in front of you is the open interest snapshot for November 5th. Now, based on open interest, range for price is at 10,000 and 11,000. Range shift has happened on the upside if you see, because earlier range was 10,000 to 10,700. Price as of November 2nd, that is previous day, stood at 10,580. Now, as price consolidated today, strong open interest addition was seen at 11,000 call option. This was the reason for range shift happening in the market. Again, a clear indication of higher levels to come given how open interest and price structure has shaped up. Now, whenever you see range shift suggested by open interest, try and see if recent price trend is confirming the same and if data of price and open interest will confirm the same in the next couple of sessions. Again, this is a very simple yet effective concept when it comes to option chain analysis. Let us now move to price analysis segment to understand November 5th better. If you look at price analysis for November 5th, price has moved lower with a gap and then consolidated to close higher near the November 2nd top end of range. Now, towards the end, when price moved back up, volume for the candle was highest for the day. Again, this is a very positive sign. This was again a bullish session. It may not have reflected in open interest or price as such, but the fact that price moved up after gapping down along with the range shift data that you saw on open interest clubbed together, this suggests that session was in favor of buyers and the underlying trend of the market, which is up, is still prevailing. This chart that you see in front of you is the open interest snapshot for November 6th. Now, based on open interest, range for price is still at 10,000 to 11,000. Price as of November 5th, that is previous session, stood at 10,600. In today's session, that is November 6th, price attempted to move higher and then closed lower towards the end at 10,520, down about 80 points from the previous session. As price fell, open interest addition was seen at 10,700 call option. Now, again, on standalone basis, this would suggest strong resistance for the market. Again, traders who are looking at this data point would be concluding that trend might change in the market. However, let us see what cumulative chart suggests. Before we move on to cumulative chart, let us first look at price action for November 6th. So on November 6th, price starts strong as reflected here, and then it retraces back strongly to close near the November 5th range. If you look at the supply candle, it was backed by strong volumes. Again, someone who looked at November 6th's open interest activity and price activity would have concluded that odds of price moving higher would be largely limited. However, that's not the case. Let us again revisit the powerful concept of cumulative open interest chain chart to see how things shaped up. If you look at this cumulative chain chart, it's pretty clear that 10,500 would act as a very strong support for the market. It's also clear that region between 10,300 and 10,500 on the put side has attracted maximum open interest addition, and this will be acting as a strong support for the market even though we have seen price falling on November 6th. While individual sessions can be bearish, overall impact of same on underlying trend largely remains unaffected. I hope now you see why you have to avoid extrapolating the ill effects of single session on an entire series. Cumulative charts always keep you on the right side of the market. Do include this concept in your trading. Now, some of you might be questioning here that while open interest change has happened on puts, it has also happened on calls. There is no reduction as such. Well, the thing is, yes, open interest addition has happened on puts, but reduction has happened in calls between 10,000 and 10,500. The open interest addition that you see here at out of the money strike prices for calls, it may not be viewed as resistance, mainly because you have to see relatively what puts have done and in compared to puts what calls have done. I hope now you see how you have to analyze both these data points together. This chart that you see in front of you is the open interest snapshot for November 7th. Now, based on open interest range is at 10,000 and 11,000. Price as of November 6th, that is previous day, stood at 10,550. So just 1 hour of trading was recorded in this session. Due to this being a truncated session, it was a Muhurat trading session. So during this session, we have seen open interest addition was seen mainly in puts. Price wise, nothing significant happened. Again, it was a truncated session, so price opened higher and then stayed within a range for the next 1 hour till the market closed. No major change as far as open interest or price analysis is seen for the time being in this particular day, and observations for November 6th still hold true. So this is the open interest snapshot for November 9th. Again, based on open interest, range for price is at 10,000 and 11,000. Price as of November 7th, that is the previous day, closed at 10,630. So as price consolidated with an upward bias in this session, open interest addition was mainly seen at 10,100 put option, along with open interest addition at 10,700, 10,800 and 11,000 call option. So price is at 10,600 levels, so you don't have to bother too much about what you see at 10,000 or 10,100 put option or call option strike prices. But interestingly, what has happened today is while price has consolidated with an upward bias, more open interest addition has seen in calls and there is no significant open interest addition at puts. So typically when price consolidates with an upward bias, there has to be some open interest addition at puts in case market is building a strong support or a new base, but this was not seen in this particular session of November 9th. So based on price analysis, nothing much had changed. Structure of higher high and higher low was still intact and no significant volume was seen in today's session. Price largely consolidated in a range but remained positive. This chart that is seen in front of you is open interest snapshot for November 12th. So based on open interest, range for price is at 10,000 and 11,000. Price as of November 9th, that is the previous day, stood at 10,650. In this session, you have seen price has moved lower from 10,650 to 10,500. There was open interest addition that was seen at 10,600 call option, 10,700 call option, 10,800 call option, and 11,000 call option. So in terms of open interest activity, this session does look very negative. Also recollect, in the previous session, there was no open interest addition and puts, and mainly open interest addition happened in calls. There's also been open interest reduction in 10,500, 10,400 and 10,300 put option. We'll take a look at cumulative open interest chart to see if something has changed. Before that, let us see how price analysis shaped up. So in this particular session, price moved lower from 10,650 to 10,500. If you look at the candle volumes, there are strong supply candle visible on the chart. Two distinct supply candles are visible on the downside, which are signifying strong downward momentum for the day. So this session is again very similar to what we saw on October 30th and November 1st and November 6th. The important question here is whether this day or this session is important, or is it just an aberration in an ongoing trend? Well, let us now go back to the cumulative interest, open interest chain chart to check this out. Price for this particular session closed at 10,525. So this is the cumulative open interest chain chart that you see in front of you. With price at 10,525, maximum open interest is at 10,500 for puts, and for calls it is at 11,000. While price has closed negatively for November 12th, there is no significant change in terms of open interest structure. Now let me explain this to you. While open interest addition at 10,500 and 11,000 is strong, it's important to note that open interest reduction is mainly noted in 10,400 call option and 10,500 call option. If price indeed had to move lower, such strong support at 10,500 put option in terms of open interest shouldn't have existed. Also, with price at 10,525, you are seeing no substantial addition in open interest in calls, that is for 10,600, 700, 800 or 900. The only place where you see open interest addition for calls, it is at 11,000. So clearly there are two things missing here. One, there is no resistance in immediate call strike prices that you see, and there is significant support in terms of open interest addition at 10,500 put option, along with reduction that you have seen at 10,400 and 10,500 call option. So I hope this particular point is clear, that from cumulative open interest chart, it is relatively easy to stay on the right side of the market despite of having a negative session like November 12th. Now it is easy to see it now in hindsight. I will acknowledge this, but this is all about practice. The more you practice these concepts, the more you see this playing in real time, and the more better you get at it. Eventually there will come a time when this will be playing out in real time, and you would know that how you have to stay on the right side of the market. So again, pay attention to this cumulative open interest chain chart. This is an extremely useful concept. So this is the open interest snapshot of November 13th. Range as per open interest is 10,000 to 11,000. In the previous session, we have seen that price has closed lower at 10,520. That is on November 12th. In this particular session, you have seen significant put open interest addition that has happened at 10,200, 10,300, 10,400 and 10,500 put option. This is exactly opposite of what we saw in previous session. Open interest reduction was mainly seen at 10,500 call option, 10,600 call option, 10,700 call option and at 11,000 call option. So had it again not been for the concept of cumulative open interest chain chart, one would have assumed that previous session, that is November 12th, would be extremely negative for the market, and they would have been whipsawed today considering how bullish this November 13th session looks. Once again, cumulative open interest chain charts helps one to stay in the right direction of market. I can't begin to emphasize how important this concept is in overall option chain analysis, and this is almost never covered anywhere, and I've not seen traders using this that often. So this is the price analysis chart for November 13th. Price staged a remarkable comeback to close higher on back of strong momentum. If you look at the candle volume charts, clearly one strong demand candle is visible on the chart towards the end of the day. So this strong demand candle essentially countered the strong supply candle that you saw in the previous session. Price has essentially moved back in a range. Had it again not been for cumulative open interest change chart, yesterday's session would have been considered as very negative, as price had also breached this previous pivot point. So I hope this particular session is also clear to you. So this is the open interest snapshot of November 14th. Range as per open interest is 10,000 to 11,000. In this session, price has largely consolidated and closed near November 13th price level of 10,616. While consolidation happened, 10,600 P added the most open interest, followed by 10,900 call option. So 10,200 put option and 10,300 put option did see open interest reduction, but as seen in cumulative charts, such out of the money open interest activity in puts or in call has limited effect over the very short term, and these should be ignored. If you look at the price action chart, clearly two strong supply candles are visible, but open interest activity was not bearish, and these two supply candles have formed within a structure of higher high. Always remember that you are looking for price and open interest confirmation, and when either of the two does not confirm, stick with the underlying trend. If with trend you still have doubts, then do revert back to cumulative open interest chain charts to be certain. Be objective in this case and don't let your emotions take over. So let me repeat, check price analysis and then look at open interest analysis. If you cannot draw any conclusion, check cumulative open interest chain chart. There's one key element missing here, and that is of implied volatility, but I will come to that towards end of this video. This is the open interest snapshot of November 15th. Range as per open interest is 10,000 and 11,000. As price consolidated in this session between 10,600 and 10,700, open interest addition was seen at 10,400 put option and 10,600 put option. Some open interest addition was also seen at 10,700 call, but on a cumulative chart this would be irrelevant. Open interest reduction was seen at 10,500 call option and 10,600 call option. Important point here is that price has consolidated while open interest buildup at puts has increased. If you look at the price analysis chart for November 15th, price has moved up by about 20 points with respect to previous session. No significant price action as such was seen. Demand and supply candles were largely absent. Similar to open interest data, price data also suggests consolidation within a structure of higher high and higher low. While dealing with open interest and price analysis, you'll have to be mindful of sessions which create doubt in your mind. You will have to then use cumulative open interest chain charts along with price analysis to keep such sessions away from altering your overall opinion and position in the market. This actually essentially forms a very crucial aspect of option chain analysis that is often overlooked. So this is the open interest snapshot for November 16th. Range as per open interest is now at 10,000 and 10,800. If you see, upper end of the range has now come down from 11,000 to 10,800. So again, recollect, whenever you see such range shift, always be mindful and always look for confirmation in the next few sessions. So as session progressed today, open interest addition was seen at 10,600 and 10,800 P. Price actually closed at 10,600 700, that is about 60 to 65 points higher from the previous session. And as price moved up, open interest reduction was seen at 10,500 and 10,600 call option. Again, this was a positive sign. Price analysis for November 16th was positive. Demand candles were in place as price moved 60 points higher. You can clearly spot two demand candles here, and structure of higher high and higher low was still sustaining. The important thing that you have to note here in this particular session is that of range shift. I'll be explaining this particular point in next few slides, but always be mindful whenever you see range shift happening in market in terms of open interest, and then try and look for price confirmation. So this is the open interest snapshot of November 19th. Range as per open interest is 10,000 and 10,800. In this session, price has actually moved higher by 80 points. As price has moved from 10,680 to 10,760, open interest addition was seen at 10,500 put option, 10,600 put option, and 10,700 put option. One thing to observe here is that despite positive session today and day before, open interest addition has happened mainly at puts, but range for the market has still not expanded on the upside. 10,800 is still the upper range for now. Price moved higher on 19th November and actually closed at 10,780. The price structure was good and well within the structure of higher high and higher low that we have been following. Before we move to implied volatility, let us recollect till now what we have done. From October 29th to November 19th, we have covered open interest, cumulative open interest change, and price analysis. Now between November 20th and November 29th, so this chart is not complete. What I've done is from here on November 20th to November 29th, I have summarized the chart here. So between November 20th and November 29th, that is the expiry, price has dipped from 10,780 to 10,500, and it has again moved back to 10,800. However, between this period, the way you have to analyze open interest has to change. Now, this is the second important point of this video, that is how to cover open interest and implied volatility in the last 7 days leading up to the expiry. This again, I'll be taking up in the next few slides. So what I'm doing here is that I am ending the open interest analysis at November 19th because these last 7 sessions cannot be analyzed this way. There are some changes that you have to make, and that is what I'll be covering up now. So before we move forward to implied volatility section, let us now see what cumulative open interest chart suggests. This is a snapshot of net open interest change between October 29th and November 20th. So the net call open interest change is 2.8 million and the net put open interest change is 9.5 million. Clearly, the bias as per open interest and price analysis is bullish between October 29th and November 20th. This is also one of the reasons why after November 20th, you have seen price dip for 200 points and then again move towards this particular range. This was as suggested by cumulative open interest chart. So let us now look at what happened with Nifty implied volatility between the same period, that is October 29th and November 20th. If you want, you can take individual implied volatility of options, but I would suggest to go with Nifty IV as this is widely reported by brokers as well and is much easy to procure. Nifty IV is not the same as NSE India VIX. Try and use Nifty IV as it is calculated using front month options and it represents future volatility well. Now, a lot of you have asked me queries on this. Just prefer using Nifty IV for now and don't track individual IVs. Move to individual IVs only once you become more experienced in handling implied volatility. So let us look at what happened to IVs between October 29th and November 20th. So this is the Nifty IV chart. So Nifty IV moved from 19.81 to 15.9. And let's recollect that net put open interest change was 9.5 million. If you note, Even calls have added open interest, but relatively look at how puts have done. Open interest reduction, if you see, was mainly seen in calls between 10,000 and 10,500 level. So the relative analysis of how calls and puts behave is what makes open interest, IV and price analysis very subjective. So what we have seen here is that we have seen increase in open interest in puts along with fall in implied volatility as session has progressed. So if you remember, this was rule 2 when it came to price and open interest analysis along with implied volatility analysis. And what did rule 2 suggest? Rule 2 suggested that whenever increase in open interest in puts happen along with fall in implied volatility and price confirming the same, that indicates fresh short formation or writing in puts. If you also note, I have left out put call ratio and I will come to that in a bit. But first, let's see how to deal with price, open interest analysis and IV in the last 7 days leading to expiry. So during the last 7 days leading to expiry, always combine open interest for current month and next month. You can also view current data and next month separately if you don't want to combine the both. However, in your open interest analysis, you will have to start looking at next series data as well to understand the bias of participants in the market. Now, quite often there's a subtle shift in how participants are positioned, and this can only be seen if you combine both series together in the last 7 days. So avoid looking at put call ratio of the next month till expiry happens. Only stick with the current month PCR, that is put call ratio. There will also be no change in how you look at IV. So whatever IV data you are getting for the month, stick with it. Changes only apply to open interest. As far as price analysis is concerned, only focus on current month charts till the point expiry happens. So let me now give you some practical tips as far as option chain analysis is concerned. So heading forward, it's important for you to see which combination works best for you. What I would suggest is that always pay attention to open interest cumulative net change charts. These charts will always help you stay in the right direction of trend. We have seen countless times in this video itself how these charts have made us stay on the right side of the market. This is a very powerful concept and try to master this concept in particular. When it comes to option chain analysis, I think price analysis, open interest analysis and implied volatility are the most crucial ones. This is the combination that has worked best for me and I practice this on a regular basis. I would actually assign price analysis about 40% of weight, open interest analysis about 30%, implied volatility about 20% and PCR just about 10%. Remember one thing, that PCR should only be taken as a supplementary indicator and in my opinion it is the least important out of all these that we have discussed, and this can be ignored as well. In case you're a beginner in option chain analysis, you can start to consider PCR at a later stage if it causes confusion at present. The way you have to proceed here is to try and watch this video 2 times today and then 1 time tomorrow. This is an enhanced way to learn a concept and I have highlighted the importance of doing this earlier as well. I will be uploading more videos on option chain analysis, but those would be the trades I take, and when I take those trades, I'll make a case study out of it, whether it ends up in profit or in a loss. The key here again is to practice and to take notes and to always pay attention to the concept of cumulative open interest chain chart. So if you find this video worth it, kindly consider sharing it and kindly consider hitting the like button as well. So thanks a lot for watching this video, guys. In case you have any doubt, do let me know in the comment section below. See you next time. Take care and be safe.
Click on the subscribe button and bell icon to get instantly notified when a new video is uploaded. Thank you for subscribing.